Wall Street cutting Monday's steep losses. Tech stocks now in the vanguard, led by Apple. For more on the markets, we're joined by Max Wolff. He's a managing member at Multivariate. Welcome back, Max. So,
thank you.
What do you read into today's bounce back? Yesterday was down 1.6%. Today it's whittled about 2/3 of those losses so far.
So it does look like the markets decided to take a relatively happier outlook. Yesterday it looked like the fever might have spread to the floor at some point. And I think today there's a bit of a relief that maybe the worst fears were that fears as opposed to realities. I do think this is a fast-moving target, and we don't know enough yet. And I don't particularly envy the tourism industry in large portions of the world, and I don't particularly envy the airline industries. And we're starting to see some interesting long-term potential damage stories here. So people are starting to get nervous about some pretty far-away big events like the Olympics this summer, and obviously hope it doesn't come to that, but still reasonably contained, it looks
well,
like.
Max, you've got an economist background too. What's your read into this, in that this virus could possibly become a global pandemic, and then by extension, could that hurt global growth? And if that happens, what about that R word that seems to have been dusted off to the side, recession?
Yeah, so China's not without its challenges coming into this, right? And Wuhan is an important industrial city in the country, and a large, 10 million people. It's not a small town by any stretch. These things can get pretty bad pretty fast if they dissuade tourism, which is a huge global industry that people tend to undercount. I know there's some fear among various sponsors of the Olympics in Japan being damaged. If we're still talking about this when those Olympics roll around, then clearly we've skipped out on any kind of good bounce back scenario. I think the bigger issue is the forces of globalization are under attack. This does not help. And if this falls into a nationalist battle of calling each other's citizens risky and trying to contain them, this will further batter a weakened globalization and sort of be a protectionist piece, and that will be very frightening to me. And I think everyone at that point, you're starting to take off percentage points on your GDP forecast. Then you're going to go from, not but 0.1, 0.2, 0.3% haircuts to GDP, but that would only be if this persists and or grows for another month or two.
Anti-globalization, meaning what? It could become a political issue that extends into things such as immigration and all?
Absolutely. This is a pretense to stop people's products and to stop people from moving around, and people enjoying each other's products and visiting each other's country and working in each other's country is the sort of bedrock of a more communitarian globalization that has been in for tough days, tough weeks, and tough years of late.
And Max, I know you're also a specialist on Apple and tech stocks. Apple's in the vanguard today, ahead of the earnings that comes out after the bell. What will you be looking at? There's a lot of people talking about, well, services versus, the iPhone. And there's also talk about how could it be affected by, for example, this coronavirus in terms of iPhone production.
So iPhone production is the easy one because they need people to be able to travel and to work. And I think a lot of people don't understand either that the New Year celebration, which we're in the tail end of now, is one of the greatest human migrations that take place every year. And if people go somewhere and can't get back, or that travel, hundreds of millions of people's travel is disturbed, it immediately has workplace effects. There's also been a fair amount of political instability in southeast coastal China, where a lot of the phone production takes place. And so an additional problem there will not be good. Quarantines and cities cut off from the world are not good. So I don't see it immediately as a risk. But the other thing is that when people feel beset by illness, they don't buy overly expensive splurge products so much. They hunker down, and it's a threatened mentality. And Apple sells a very expensive luxury good for most of the world, so not good on the buy side probably either in terms of demand.
And Apple shares having practically doubled last year. How much more oomph is there in this stock last year on not the greatest growth year for Apple, but everyone's betting on 5G?
Yeah, 5G is obviously going to be a shaping force. I would say one thing, Apple's made maybe more than 30 or 40% of the total profit in the wireless space. So I'm not sure that a whole new regime is good if you've been on top in the old regime. Some of the more ebullient analysts are sure, but I think history is at least a cautionary tale there. And I think Apple had an incredible year on very mediocre actual fundamentals, which means this year they could actually have a good year again on good fundamentals, or a bad year. I would say this, Apple's pretty expensive right now, but it's still cheaper than many inferior goods with inferior shares with a higher multiple. So it's hard to bet against them. In terms of the services, that's a little bit still of a pipe dream. It's a high margin, but you're still talking about 60+% of this company's profits and revenues coming from the iPhone. There's still an iPhone company dragging around a bunch of prospects, and those prospects could grow up to be any number of things, but superstar isn't always the most likely thing that you grow up to be.
So if people don't have it, should they add on to Apple shares at these levels?
If they're going to buy another risk asset, sure, because they have a lot of cash, they have an incredible brand name, and they're probably going to figure out good ways to deal with whatever market we see. But if you're looking for a deal, there are precious few, and this is not one of them.
All right, thanks a lot for your thoughts, appreciate it. All right, our thanks to Max Wolff of Multivariate. I'm Fred Katayama, and this is Reuters.